To make money, you have to be in the winning trades. In this video, I'm going to be sharing with you my simple entry process from start to finish so you can identify and trade high probability setups in any market conditions. My name is Luke Burton. I've been trading EURUSD only for the past 3.5 years on the minute chart. I'm the dual founder of Not Just to Trade, where we teach experienced and new traders how to read every market move. The concepts I'm going to teach you today can be used on any time frames in any markets. Stick around to the end of this video and I'm going to give you the high probability trading setup and framework used in this video. Okay, so part one of just understanding how to identify high probability setups using trend structure is just understanding what has happened on the higher time frame. Now we're on a 15-minute chart at the moment, and all I'm doing now is just following the trends in the market. Now this is all very basic stuff, and you can learn a lot of this on just baby pips and just very basic understandings of how the market moves from higher prices into lower prices. And as we can see in this example here on the right, all we're looking at is A to B's, an A to B that causes a structure break here. We pull back into premium or discount, we create the next lower high, we break the next structure to the downside. Again, this is the BFI footprint in the market. When they break structure, this is their footprint. Then we pull back into premium pricing, and then we see continuation and we break structure. So if we're in a downtrend and we've pulled back into premium and we've seen a mitigation out of a range, again, we use RIMC to understand where we can take price. Range, initiation, mitigation, continuation is a full price delivery. So now if we have a range that's inside here, we've seen an initiation, we've broken structure to the downside. Just draw that again, range and initiation that's broken structure to the downside. And we think about what we're seeing here on the left. Again, this is a range in between the candles on the 10-minute, which again, we identify within Not Just to Trade. Again, a range between the candles, the same as you see here, a range before price initiated to the downside. We've broken structure here as well to the downside, and we're within this A to B leg. So if we go back over to the right again, we're using this model here to understand the full price delivery, and we're using that within the structure, this structure high to this structure low that's caused this structure break. Now what we're doing is we're identifying locations where price can see a reaction from before we get that continuation of that price delivery, and then target this low for continuation. So all we're doing there is just understanding the higher time frame. So just in its basic understanding right now, we're in a bearish trend. Again, lower highs are maintaining and every low is breaking a structure to the downside. So until we see a momentum shift, until we see price break structure to the upside, we're now still in a bearish trend. So we expect price to target these lows in the trend. So even before we get to the point where we understand where price can react out from, we're in a bearish trend. So we expect that this low is going to become a target. So for me now, I'm just going to mark that off just so I know the area that price is going to move down into. Now, again, like I've said, we're just following the trend from the higher time frame. These A to Bs that we're seeing here. We can go onto a lower time frame and see we've got smaller A to Bs, and we'll do that when we go down onto the minute chart. This is just reading between the time frames, but overall we're just going to take the 15-minute swings and just understand that the overall direction right now is bearish, which means that this low should become the target for a continuation. So that's the first part of just understanding how to enter high probability setups. It's really just about understanding direction on the higher time frame and looking for trades within that direction on the higher time frame. So now when we get to part two of just this understanding, we overall have our direction. Now we can add on our framework. So again, A to B. All I've done here is just put a fib tool on so we can see the 50%. This is premium pricing. This is discounted pricing. If we're in a bearish trend, we always want to be selling at premium prices. We don't want to be selling at discounted prices. So we have our framework added on for our A to B. And again, the framework that I'm showing you right now is going to be exactly the same on the lower time frame. Price is fractal, so we're just going to be doing the same thing on the higher time frame as we're doing on the lower time frame. We're just going to be diving deeper into exactly which area to trade from. So right now, I've just boxed off price in this sideways range here. Now, even though price is contained sideways, which again is the first part of a price delivery, a sideways range before an initiation, we are currently inside a sideways range. Now, that doesn't mean that we can't get trends inside the sideways range that we can read. So let's go down onto lower time frame. Let's go down to the minute chart now, which is the time frame that we look for our entries in. And this has to be in line with the higher time frame. In fact, let's go to the 5 minute first, just so we can get a broader picture. Now we're inside the sideways range here. All we want to do again is just identify, if we don't need to identify, but if we can identify an A to B that's caused a swing structure break. And again, that's just showing intention in the market now. So we have our A to B. Again, we can use our framework and put on our 50%. So we've got premium and discount. And again, now we're narrowing down our area that we want to look for our setups or our trades and our continuations. So we can see on the 15 minute, this is a whole buy to sell. I mean, it's the 5 minute, but we can see it on multiple time frames. This is that whole buy to sell that's caused this structure break here to the downside, which has created the A to B. So we know that this is a good location inside the range that we could see a reaction from. And again, a continuation means that this low gets targeted for that bearish trend to the downside. And again, this is in line with our part one, which is trading with the higher time frame. So we found our location now that we're looking at price. Now, all we want to do is go down onto the minute chart and do exactly the same thing. We want to see price go into a bearish trend, and then we want to add on our framework in the bearish trend to then find good locations to trade from with safe stops that we can follow this bearish trend with. So let's go down onto the minute now and have a look at that. So now we're down onto the 1 minute chart. All I'm going to do now is just zoom into this area. We have a good understanding of where we are. We're at that higher time frame mitigation that we've seen here. Now I'm just going to zoom in and I'm going to look for the same thing that we looked for on the higher time frame. I want to understand the trend. I want to understand the A to Bs that are breaking structures in the market to the downside. I want to find the swing points, and I want to find the most recent swing points. So let's add those on now. In the market, most recent swing points. And again, we're looking for those A to Bs in the market that are breaking structures to the downside. These are those lower highs showing that we're in that bearish trend in the market to the downside. Lower highs are breaking the lower lows. So now again, after we've done that and we've identified our most recent lower highs and lower lows in the market to understand the trend, and again, we're trading with that higher time frame trend direction. Now we want to add on our framework, which is our premium and discount. Now again, what we're doing with adding on our framework is we're giving ourselves an area that we want to look to take these trades in line with a continuation to the downside. We understand that because the lower high has broken this low, this high will now be protected up here. So anywhere within a premium area, selling down into a low for a continuation of the trend is what we want to be looking for to the downside. So again, let's just zoom out and give ourselves some perspective as well. We've understood that we're in that bearish trend now as well. We've got our A to Bs. We're playing with an intention of this A to B, which means then that this low will become the next target for a continuation of that bearish trend to the downside. If we zoom out again and give ourselves more of a perspective, we've got this A to B that's caused this structure break here as well. So now we're expecting that price is going to see continuation down into this low. So everything is lining up for us now. We've got higher time frames showing that we're bearish. We've got lower time frame structure also bearish, and we've got our entry time frame, which is the 1 minute chart, which is also bearish. So now all we want to do is look for entries. Where can we look to enter the chart? Where is price showing us a high probability location where we can have a safe stop in price? Now, this is the range that we're looking at. This is where price has become sideways in the market here. So anything that's above this area, this low, is what we want to be looking at. And we want to be looking at any sort of locations or any sort of ranges or buy to sells up in this premium area that we can look to take for selling opportunities. Now, I can already see that this is a whole buy to sell. So I want to be looking inside this whole buy to sell area. This is the run up. This is the low that pushed up and created the high before price then drops to the downside. And we've run all of this liquidity here. So this is where the manipulation started at this low. And this is where they then initiated price to the downside. So again, we can use our model of sideways range here. Initiation causes a structure break, mitigation, continuation. Now in NJAT, we'll be refining this entry point down into this inside bar here and looking for our entries. So we will really be specific on where we're looking to enter price so that we can get the smallest stop just above the high, and that will be safe for a continuation to the downside. And we always target 1 to 10s in Not Just a Trade. And that will be a nice continuation play to the downside. Now, you don't have to trade it in that way. I'm going to show you multiple ways that you can trade it. If we was to go back and look at just this whole location and you was to look for the whole buy to sell, or you was to play the whole sideways range here. Now, all you want to do is get involved in a good location. You could either have it your entry here with your stop above the high. Again, you just want to have a safe stop at this point. And then your 1 to 10, if you're targeting 1 to 10s, you know, some people is going to target 1 to 5s, which again will be at this location here. Let's just zoom out so we can see a full picture perspective. If you're targeting 1 to 10s, again, it's still before that previous low that we're going to be targeting overall. So again, it's just how refined you are. You don't have to always be so specific in the market, but being more specific is going to give you tighter stop losses and quicker take profits, which is what we focus on and Not Just a Trade. However, we do know that there are people that trade in many different ways and Not Just a Trade. There's people that trade on the 5 minute, the 15 minute, or the 1 minute. It's whatever your preference is. So I'm going to show you multiple ways of getting involved. So let's just play this forward. Again, it's just a process. What's important is you understand the process and the framework and the understanding, and that's what you can use to repeat this same entry process and this same high probability setups. So let's just play it on and let's just play this forward. And we can see we would have got tapped into the trade here. And then you would have seen continuation to the downside. Now, if you had played the inside bar, which again, a lot of you guys would in Not Just a Trade, you know exactly where you would be looking from going through the course. This is where you could have got in with a tighter stop here, and you nearly would have already hit take profit. Now that's a 2 pip stop versus potentially a just over a 6 pip stop. So it really depends on how you want to trade and how specific you want to be in price. But again, we should expect that this low then becomes the next target if we're playing that continuation of that bearish trend. Like so, this is that next lower high in the market. So we've got a high, low, lower high, and we expect price to continue to the downside. Now, we're trading with that lower time frame, that 1 minute trend, because we know what the higher time frame trend is, and we know our higher time frame directions, and we know our higher time frame targets. So it becomes very easy to find an entry when you understand your higher time frame direction and your targets. So yeah, so let's play this forwards. Again, 1 to 10s is what we look for. If you had played 1 to 5s, you already would have hit TP at this point. And again, eventually then you would have hit take profit on that trade. Now let's just go to the higher time frame and just see how this plays out. Again, we're just playing that continuation. So we know that the low becomes the next target and we see continuation. Now, once this low's been taken out, we've potentially got a new intention coming into the market. So this is where we stay patient in the market. We've entered the same process on the higher time frame and on the lower time frame, and we're using these processes to find high probability setups in the market. As mentioned earlier in this video, the next slide, I'm just going to add on this setup so that you guys can see it and you guys can go back into the markets, have a look for it yourself, add these trades onto your system and start trading them and just see what your results are over time. Remember, it's all about being patient, waiting for the setup to come to you and then executing it flawlessly. We will teach you how to read any market move on any currency pair using our concepts and framework. To start your journey with us and join the Brotherhood, visit the website at notjustatrade.com. You can also contact us on Instagram at notjusta.trade. Any questions that you have, all our contact information will be in the description of the video. Drop us a like and comment if you enjoyed the video. And remember, there's never a better time to make a positive change in your life than now.